Hey everyone, and welcome back to another video. In today's video, we take a look at everything to do with the stock, crypto, and commodities markets right now in not only a peak point of volatility, but also some bearish signs coming. An evening star formation on the stock market has a lot of people concerned, and we have a red box down here, which signifies a key level that you need to be looking at. Crypto's going wild again, commodities are going up, and some markets look good while others look really bad. Stay tuned to find out more about all of this soon. So welcome back to our market recap for the markets closed 7th of February 2022. And if you're interested in everything to do with the markets, whether you're an investor or trader, please remember to smash that subscribe button, as I think you'll enjoy some of the content here today. But let's start off by taking a look together at some of the key big moves for the session. And it was clear that it was another attack on growth stocks. The Nasdaq was the worst performer for the day, and it was Google, Facebook, Tesla, Microsoft, PayPal, Netflix, and even some semiconductors that didn't have a good session. So let's break down what Wall Street was doing throughout the session, because it's important we understand the psychology of the bigger funds and the bigger managers. Well, as we often suspect, Monday starts off, usually there's a little bit of a pull up, which is created by retail. Retail gets excited, we want to buy up. It then dipped, bought up again, probably trapped a few people into purchasing it, and by the end of the day, the sell-off was pretty evident, of course led by tech, and really only the smaller caps. The IWM Russell was doing better, and we'll speak about that later in today's video. We'll also be covering off on a little bit of Tesla and some of the key stocks that we're seeing some great setups happening right now. So let's move over to the sectors. Things like jets and gold have done well in the session. That was good because these are two sectors that we've been looking at a little bit throughout January. And it was really just a mixture of sell-off across the board. It wasn't hugely towards the consumer staples and the defensive sectors, XLP and XLU, but it was clear that Wall Street was getting ready for a larger Tuesday, as this was an inside day move due to probably not having enough news to push it through any of the key zones. We'll talk more about inside days and what they mean for the market, but yes, it wasn't really a highly volatile day, and once we break past either a key resistance or a key support, we expect quite a large move that we'll be looking at a little bit later. So this is the earnings for the week ahead. There are quite a lot of earnings, but they're not as big as they have been. Obviously, we've seen the Facebooks, the Amazons, the Apples, the Googles. We do have Disney coming out after the close on Wednesday. We also have Twitter before the open on Thursday, Cloudflare, some other giant companies coming out. And there's going to be quite a lot of interest around these earnings as we continue to create the narrative of whether earnings are living up to expectations, and of course, what's going to happen with interest rates and inflation. And is that a big concern? Will we see a sell-off in growth that continues down? So I wanted to talk about what we've discussed here for the last couple of days in trading. And that has been that when we have large rallies at the end of months, which is quite rare, especially when they're big, those 4-5%, we tend to have a weak or sideways month the next month. Remember, the stat here is 30% towards the positive side. So it bodes kind of poorly for February in terms of having a start to end positive month. And that's why we're going to see continuous volatility. The other thing is when we have a bad January, which we did this year in 2022, we do tend to continue on to February. Only 33.3% of the time do the stats line up as being a positive for that month. So when you're thinking about markets right now, and especially what's being attacked, which is growth stocks and all of those types of inflation concerns about those, it makes, or it seems to be a reasonable conclusion that we do tend to have that weakness. And you'll notice here that if we went through the last 20 years of the Nasdaq returns or technology returns, they do tend to be weak in February and March, but guess what? It turns around. So a lot of people are going really bearish. We tend to be, as a community, a little bit more bullish towards the bull side, medium to long term. And this could be one of the best opportunities that you're going to see in the next couple of years to pick up some of your favorite stocks. So the key here is always having a plan towards what you want to pick up, and also having a plan of how you're going to trade in volatile times. And we'll be discussing some of those things throughout the video. If you're interested in following us on Twitter as well at FX Evolution, we'll be posting some extra little bits of snippets of information. We posted some stuff on the Bitcoin breakout. Since then, it's gone up well over $2,000+. And of course, Tesla and our discussions for the week ahead. So there's some good stuff there over at FX Evolution. Let's move over to the VIX though. Let's talk about the volatility in the market. So volatility is still high. We have a bit of a rule as a community, and our community rule is if the VIX is above 20, we probably need to stop swing trading. And for anyone that's done swing trading in the past, you probably wonder why the market doesn't make sense. You get ripped up a lot. Swing trading is really tough when the VIX is above 20, when volatility is high. So we tend to go with scalping day trading and picking technical analysis levels of great stocks that you want to hold in your investment portfolio. And that's something that you can do and make an easy rule maybe for yourself. When the VIX is above 20, we do that. So the VIX has come back down, it's hovering around that area, and we're waiting now for a break. If the break to the downside occurs, expect the VIX to, of course, skyrocket back up. And that's going to be something that a lot of people, I'm sure, are looking at for the trade. Let's move over to the 2 years, something as well that we need to pay attention to. The 2 years trading at 1.3%. We had a flag, we had a second flag, and the prediction, I guess, here is around that 1.4 to 1.5 is quite possible in terms of the 2 year rate to get to. We know that markets get a little bit, let's say, in excess. They go a little bit too high. The Fed's probably sitting around here right now. The market's here. And the key is for them to meet in the middle. So while the market's going out of control and freaking out, this is a time where we expect volatility, but once we start to turn around with this 2 year, that's going to be one of the key 4 reasons that we believe the market has found its base. So remember, watch the 2 year and also watch the 10 year in terms of interest rates. That's sitting at about 1.918. And when we put it out to perspective, you'll notice that closure on the weekly was pretty big. This is a key resistance coming up. If it breaks past here, boy, oh boy, could the markets get incredibly volatile. Worthwhile watching that. In the last 24 hours, we've seen some pretty big trades. We've also seen gold break out again, and this has been in a massive trading range, but we have some great signals here towards the bull side, and it looks like gold is finally going to get another good day trade on it. We've got a trend line. It's held up now for a while, but think about the left-hand side story, the technical analysis coming into this, and what we have here is we have a bullish hammer, another bullish candle, and a closure above that range. Even if we pull back now, we're above the 20 moving average, the red line, the 50 moving average exponential, the blue line, and the 200 simple moving average. All of these will act as a form of dynamic support for gold. So the chances are here that gold may be actually breaking out and showing some signs of strength. And this goes along with silver, because when you look at the silver chart, it's just at the resistance. And if gold continues to pump up, what could this be? A very similar thing, a double bottom pattern, really nice tweezer bottom here in terms of technical analysis. So both silver and gold are showing the best signs they have for a little while now. It's been a tough trade, but there are sometimes some good day trades there. So silver is at the resistance and gold is looking towards the next level of resistance, which is going to be around 1830. And then past that, of course, I'm thinking towards the 1870 at that point. That's the next really big zone for this. Good movement in. Hopefully it can continue its movement up. Now, one that's already completed, US oil. Congratulations to anyone that's been taking this over the last couple of months. It finally hit our 92, got a little bit higher at 93, and this is our longer term resistance for it for the time being. So for people that are worried about it at the pump, I'm not sure if this is the end for oil, but it's certainly at that previous support becoming resistance. Remember, this is why technical analysis is so great. You can tell the market has hit the zone and people are taking profit. It literally shows you that that's what's occurring. Why? We have a long leg doji, a high, a low, an open, a close. And if we break down and close below this, we have to expect oil to have a little bit of a pullback, possibly to the 88, to consolidate for some period before maybe making the next move. If it goes and breaks past the new highs, well, next stop could be 103. So oil has, still got potential in it, but I'm thinking it's probably exhausted at this point. A lot of people in the community believe that as well, and it's hit that resistance. So congratulations to anyone that traded it. Let's move over to some stocks now, look at some key sectors that we love. Then we'll go into indices and the crypto markets. And we'll start off here with Tesla, because Tesla is stuck between a rock and a hard place. 950 has a lot of calls on it, but more importantly, 1000 has the most amount of calls on it for the week. So where do we expect resistances to be formed? Well, of course, around 950 would make sense, and then around 1000 would make the next level of sense from the bull side. Now, where did it stop in the last session? It got up to a high of 947.77. So right on that 20 moving average, the red line, plus our previous horizontal resistance. And we've got a story here, basically a rejection or hanging man style candle, a rejection candle, and a new rejection candle. If you're a bull on Tesla, does this resistance matter? I think it's a hell yes, it does. At this point, it's going to be pretty damn big. If it breaches that, the next logical stop for it, based on options and based on previous support resistance, would be 1,000. There could be a great day trade in there. But there also could be a fantastic trade towards the short side. If we start to see the Nasdaq fail, move underneath some key supports we'll see soon, this level here at 880 could be also a great trigger. And I think the next trading sessions will be very interesting for Tesla because, as you know, we do love it as a trade stock. And when it breaches a range, it tends to move very quickly, very fast, and of course give you great daily percentage. So Tesla is trapped within a range, some great TA there. Let's move over to some of the favorite sectors at the moment, or should we say probably the least favorite of the market sectors, and this is biotech. Now, biotech's seeing some pretty large volume transactions going on around this base, and that's one of the key signs that we always look for. We saw some pretty good volume over here, but we never got that breakout past the resistance. Here we have a resistance forming around that 96 level. And if XBI is able to get through it, it's kind of forming a base, especially if the market's turning around at the same point and it ends up going to make, you know, a new peak off the previous one. This could be one of the sectors that does the best over the next couple of years. Remember, biotech and healthcare are kind of mid-cycle within the new cycle. So around 2 years to maybe 2.5, 3 years after the whole crash occurs, we see the transition to biotech to healthcare. It's probably still early, but certainly on its base. And remember, max pain has also been achieved here when we think about it, because a lot of people would have been buying here, fair enough. And what we have is we have a long leg doji, a rejection candle, and some great wick levels here. So again, big sellers at the zone, if it breaches through, could be one for you to look at over the next couple of weeks. Let's look at another favorite right now, which is obviously going to be Amazon. And Amazon rejected the session. It went higher and then rejected, creating a shooting star or pin bar that many people think of it as. We've got supports becoming resistance, and this could be one of those ones with day trades. Remember, Amazon, I believe, is in rumor of purchasing other companies at the moment. That could also hurt their share price, depending on whether the market likes the deal. But more importantly, we have kind of like a stop loss level. If you're wanting to go down this line, you have obviously a bit of a day trade trigger, potentially below the low. And for some people, they're going to be looking for a gap close because they look at the fundamentals of Amazon. They say, you know what? I don't think it's that good. It's maybe not as good as everybody thought it was. And yes, the after hours pushed it up, but I'm looking for that gap close. So the opportunity in Amazon or Tesla or any of these stocks is actually quite big moving forward, especially if we get the follow through. Certainly an interesting candle here at the right zone, and you'll need to place it based on your, of course, own technical systems and figure out whether it's for you or not. Let's move over here to ARKK. So ARKK has rejected the 20 moving average quite a few times. This is the red line, and it keeps rejecting it. It rejected it in the previous session again. It is forming a base though, and again, volume is the highest we've seen it in some time. So we believe there is a transition going on here, and we've talked about this several times. ARKK, while maybe not all the stocks in it are great, the hyper stocks in general are the most bashed in the market. They're cheaper in many ways than they were pre-pandemic. So that is that the valuations have gone so far to the downside that they're cheaper than they were even after all the growth they've experienced during the pandemic. And that's pretty amazing when you think about it. This is truly a big change in fundamental valuations, which is probably a healthy thing for the markets. But we have this resistance, we have this downward trend line, and we certainly have some points where we'll be kind of going through as a community together when we believe the turnaround story is coming. Let's move into indices now. We cannot ignore IWM, but we're going to say really the same thing, which is this is currently in Wyckoff distribution, and obviously it's broken below. We won't really be convinced that the whole market is recovering broadly until the 2,000 small companies get back above this level. We know that shorts are tough, so that's a big thing, but this is an early warning sign that bad things are happening in the markets here. Basically, the small caps are kind of like the health of the economy. If they're not holding up and the big ones are where it's holding up, e.g. the big tech stocks, and they're doing better, and the big companies in the world. This is really showing that there's just not enough strength. There's not enough broad-based recovery, and the markets can tip over at all points. So we are still looking at IWM from a weekly standpoint. We still understand that it's in this big kind of pattern at this stage. And if we take a look at the 2 hour, you'll notice that it's really trapped. I mean, basically we have a resistance sitting around the 203.60, and then we have a new low at 195 here. If that had happened, we would basically go peak, trough, lower peak, lower trough, and then move back down to the 190. So there will be trades here, but I think the better trades are probably in something like the QQQ. A lot of you were trading the Nasdaq the last 2 weeks and doing amazingly well, and watching the SP500 for Qs, and then of course trading the Nasdaq accordingly, which is a very smart and great plan. So with the QQQ, with the Nasdaq, what is the big key zone? Well, it all comes really around here. And let's break down the smaller time frames. Let's go to the 2 hour time frame. What we'll notice is we have great resistances. We have a fantastic bull side scenario where it breaks through here and it goes to fill the gap. Wouldn't that be a fantastic day trade? Yep, certainly would be. And then we have pressure being put on the bottom end. So that is the resistances around here becoming support. And for illustration purposes, I'll use the Nasdaq, so the NDX here, just to show the level or pricing range. I think some people that don't trade the QQQ won't get it. So 14,500, that is the zone. Resistance, resistance, support. Will it be support again? Think about the scenario: peak, trough, lower peak, lower trough. A sequence would be made here which would send the market bearish and possibly all the way back down to 14,000 where we get the big test. So reckoning is coming. If we get under 14.5, close underneath that zone, the most logical technical answer for that next level is going to be 14K. A lot of people are going to be pretty scared at that point, and with right reason. So that's something in the bear case scenario. The bull case, it's all about getting above here, and then of course filling the gap and putting the pressure back on that 15.2 level. For the S&P, it's the same thing. SPX, we talked about the evening star formation here, the gap up, the candle, the gap below. It hasn't broken to a new low, but guess what? It's all around the same zone. So if we break down a 2 hour here, it's very similar. We have the resistance at 44.50. We've got the peak, the trough, the lower peak, the lower trough. And let me bring up the SPY just to get the prices so you can see them. And of course that will allocate around 440. That will allocate at the resistance for the gap close around a 450. So when we have a look at options, I think that's something that we need to understand. What are people doing in the market? Are there bearish bets being placed? Are there bullish bets being placed? And I think the problem for the bears a little bit here is that there are more puts open than calls to the upside. So there's clearly a range here this week, but there isn't necessarily a huge amount of bullishness. Generally, you see the market kind of trap bullishness like they did in the previous week. Go back and watch some of our videos. We really use this incredibly effectively. So I'm not sure if we can use this as effectively other than saying we have some put walls that are sitting around zones. And of course, if we breach underneath those, that would be surprising, but we will have to watch how it trades throughout the week. If we go to the next week, things get even weirder because at around that 420, we have a strong put wall. So that is that if the market does go short this week, we suspect that when it shorts, it will be met by buyer demand because it's unlikely to get underneath that 420 over the next 2 weeks. Remember, this is the expiry for the 18th of February. So we'll continue to watch these. As we get a clearer picture, we'll bring it back in and we'll use that along with our technical analysis, but certainly worthwhile watching. Let's move over to the crypto world. We certainly called it as a community. Well done. The trend line was broken. That trend line, when it broke, created the first big move. And a lot of people kind of were not so sure about this zone, and fair enough. I mean, you had supports, resistances all over the place. It hit that resistance, and then a lot of people weren't convinced that this move was the real deal for crypto. Well, we still don't know that it's the real deal, but it's the best movement that we've seen really since the fall in the markets, because not only have we broken through a key support resistance, but we got through the 20 moving average, which is the daily red line. And on top of that, if you actually look at the weekly closes, you'll notice this is the first time in the entire decline that we saw 2 green weeks. Bullish rejection candle, bullish close. Guess what? There's never been two red, two greens in a row since we started falling in that epic collapse of the crypto markets. So it's a good first sign. 46,000 is going to be a big key. 44,000, which it just reached, is a small mini resistance. But from 44, if it breaks through, 46 will be the most logical answer. And that's because that's just such a huge level that was being held many times before. Continue to watch that space. Ethereum is similar, broke through the trend line there in the last 24 hours. That's a pretty big deal. It is recovering. It's on the daily 50. Some people are going to be looking at that and saying, oh, weakness, weakness. Really, it comes down to Bitcoin. If Bitcoin can get up to 46, Ethereum will get up to around that 3,400. I mean, that's the expectation. That's the way the market is. And the markets are across the board recovering, whether you're looking at something like, a Matic, or you're looking at a Cardano, or you're looking at, SHIB, or any of those other things. We've seen big breakouts in XRP in the last 24 hours. We've seen big breakouts in SHIB. And there is a little bit of FOMO, a little bit of hype coming back into this market, which is probably good because the FUD was so extreme for so long. BTC shorts can often also tell us whether this market can be sustained or not. And at this stage, BTC shorts is continuing to stay pretty normal, not necessarily towards the weakness or strength. We're not seeing an increase, which doesn't mean that whales are dumping the market just yet. For the week ahead, really the big news is I think we've got CPI on the Thursday session. Other than that, there's not too much that's really coming out. Make sure you have your economic calendars ready, and we wish you all the best for the week ahead. Please remember to subscribe, smash that like button if you enjoyed the video, and we'll see you in the next one. Bye for now.